So continuing the discussion of property tax levies, when we record the tax levy, it gets recorded as taxes receivable. However, once we get to the end of the fiscal year, if we're looking at any portion of property taxes that aren't going to be collected within 60 days of a fiscal year, get transferred to deferred inflows of resources due to our availability criterion for the basis of accounting under government accounting. Once the legal due date has passed, then any current taxes we haven't received are reclassified as delinquent taxes. So if we pass the date of April 1st where all of our property taxes are due and we have a certain amount outstanding, we're going to record those as tax receivables delinquent. Once we record them as delinquent, then we can start assessing interest and penalties on those. Okay. You'll see that the taxes receivable and the treatment of taxes receivable is fairly similar to most accounts receivable transactions. So we have this example where we're recording our property tax level. So we have our taxes receivable and then our allowance for uncollectible current taxes. So this amount is based on historical information. So where the city estimates a portion of their receivables are not going to be collected based on their information. So we've recorded those things in both the general fund, the revenues subsidiary ledger, and our governmental activities ledger. Then we collect taxes. So we receive cash payments and in payment of taxes receivable current. So we record that in the general fund and governmental activities. We then take the rest of the taxes that are unpaid and record them as taxes receivable delinquent. And then we have our allowance for uncollectible current taxes, and we shift that to allowance for uncollectible delinquent taxes. Okay. If we then receive, this is if we're going to receive them within 60 days. So this is a reclassification of current taxes available within 60 days of year end. This is GASB treatment that says that we can still say that that's current revenues. Okay, so we believe that we're going to receive those revenues within 60 days of the fiscal year, so we're just going to record them as already received revenue. But we're going to credit this deferred inflows of resources and unavailable revenues where we're going to say we can't spend that revenue until it's actually received in cash. And like I said, this is something that is allowed by GASB. So a little bit different than revenue recognition. Okay. Then when we record the accrual of interest and penalties on our delinquent taxes, and we record those. So we have interest and penalties receivable that we estimate a portion of that is going to be uncollectible, and then we put it into deferred inflows of resources. So that's what it looks like in the general fund. But in the government activities fund, it's going to be general revenues, interest, and penalties on delinquent taxes. When someone pays their taxes, after the due date and we've already reclassified it as delinquent and started to collect interest and penalties on it, we then of course need to record that we've received interest and penalties, we've received the taxes receivable, and we need to remove that information, that amount from our delinquent taxes receivable. Okay. So you can see examples of those journal entries here and in the Chapter 4 reading. We can also write off uncollectible delinquent taxes. So when we feel that there's no way we're going to receive this amount, we're going to write it off and record a journal entry to write off the amount of the uncollectible delinquent taxes and the associated interest and penalties. We then have other revenues that we collect during the year. So we've talked about different business type activities, different ways that we collect revenues. For example, sales taxes, that we would collect sales tax as things are sold, and then we remit that sales tax to the county or state. We sell licenses and permits. We have fines that we charge, even charge for services and miscellaneous revenues. So in the general fund, we collect that we've received those revenues and what those revenues are for within the revenues ledger. Within the governmental activities, we then put those appropriate amounts into the funds in which they belong. So here you can see we have licenses and permits, but here we're looking at general government charges for services. So that license and permits fund is part of the general government operating activities. Okay, so you can see different amounts that are split up. So fines and forfeits, sales taxes, charges for services, and miscellaneous revenues. Okay. Then we have tax anticipation notes. What a tax anticipation note is when we take out a loan against our future tax receivables. So we need to do business and we need cash to do business, but property taxes aren't due for a while. So we take out a loan at a bank and we receive cash in exchange for this note. Then when we receive the property taxes for that amount, we would pay back this tax anticipation note. When we so we have this tax anticipation notes payable, and we're looking at what did we do with that tax anticipation note. So we've recorded a transaction here. We also have payment of interest that we need to record to that. So interest is an expenditure. And then we have cash that we paid. If we have errors in any of our accounting, we want to record them as soon as they're discovered, especially if they're related to current receivables and expenditures. So errors related to prior period expenditures relate to counts already closed, so those errors need to be made to the fund balance. So we are going to make to general funds. We have governmental wide activities. And then another thing that we have is, what if we ordered supplies and we didn't receive all of those supplies? Okay, so we encumbered that we had a purchase order outstanding, but that encumbrance doesn't get honored because we haven't received those. Okay, so in that case, then we can't close the accounting records at the end of the year. We have to leave those encumbrance accounts open. Then when we receive those goods or services, they're considered expenditures of the previous year. Okay, And then any excess, if we encumbered for $15,000 and then we received supplies of $16,500, the $15,000 amount that was encumbered in the previous year would be expensed in the previous year, and the $1,500 overage would be expensed in this year because that's when the goods and services are received. So this is one of those things where it's a very different from business accounting, where they would not record that they had supplies until they received the supplies and had an obligation to pay them. So where they don't have that encumbrances activity and the possibility that that's going to overlap from one year to another. Okay, so revision of the budget. So during the fiscal year, we should review budget to actual amounts on a regular basis. Part of this reason is because governments outside of the federal government are not allowed to operate in a deficit. So only the federal government is allowed to carry a deficit. All other governments have to balance their budget. So that budget, because it is a legally set amount that gets voted into process, the budget also has to be legally amended. When we revise the budget, we have to, think, okay, we're not going to collect these amounts, or maybe we're going to have a surplus and we need to look at that. But most often it's that they're not going to get the amount of revenues that they planned, and so they need to rethink their appropriations. They need to find a way to cut money for the rest of the year so that they can get a balanced budget. When we change the budget, then we have to revise that. Okay. Exchange transactions with other funds. So this is when we have internal money between different funds and activities. Okay. So then we recognize revenues. So the fund that receives the money from another fund receives a revenue, and the other fund looks at it as an expenditure. For example, we might have city garbage. So the city provides garbage services and they charge for those garbage services. So we charge citizens to come and collect their garbage every week. Well, that is also true for our city government. So we pick up the city government's garbage every week and then we charge them for it. So if I'm the police station, when they come collect my garbage and charge me for it, I'm paying for the expense of the garbage service, but the garbage department is receiving that as revenues. At the government-wide level, there's really we still have the same amount of money, it just changed between two different funds. And we're going to talk more deeply right now. We're really focused on government activities, but we're going to have an entire chapter on internal service funds and an entire chapter on business type activities coming up. Okay. Then adjusting entries. So for our supplies at the end of the year, and this is true with business accounts, at the end of the year, we are looking for, we do an inventory of supplies, and then we do an adjusting entry to account for what supplies say we have in the accounting records and what supplies we actually have on hand. So there are two different methods for which to record the accounting for supplies. So we have the purchases method, in which expenditures for supplies equal the total cost of supplies purchased for